Thanks for checking out another clip of the Cashflow Contractor. We'd love to have you as a part of our audience. Click subscribe wherever you get your podcast.
So I want to get to the concept of burdening a little bit. I mentioned it earlier. We've talked about it in a couple of podcasts in passing. You're not a fan of it. I want to talk about why you're not a fan of it. Let's first explain what the concept is and why it might be a beneficial thing for someone to do. But then on the flip side, why you're actually not a fan of it. So what is burdening? It's a similar concept to what we're talking about, not the same, but similar in practice.
There are lots of ways people talk about burdening. One of them, for example, is I burden my payroll. In other words, you pay the guys $20 an hour, but you also pay them 10% worth of FICA food, SUDA, health benefits, and so you apply that and say, I'm really paying $30 an hour. They call that burdening, and I'm absolutely fine with it because it really is costs. And if it's variable cost labor, it goes up and down with whether or not the guys are working. So we have to make sure that nobody misunderstands what I'm talking about when I talk about burden. Second way burden is used is I'll see people bid stuff, bid a contract, and they'll put 15% margin on there, however they figure it. And then they add 10% and they call it burden. They just add 10% and they call it burden. And I'm fine with that too, because that's just a price increase. And I don't care if you call it M&M's, chocolate, peanut. Yeah, I don't care what you call it. You just added 10% to the price. Great. Where I get, and there are places that you have to do this. You have to do it for bonding companies, so do what you have to do. But what people will do is they'll take an overhead item. Let's say it's workers' comp or liability insurance.
Okay.
And they say it costs us $100,000 this year. So I'm going to take, that job was $1 million. I'm going to take, get my proportions right. That job was $20,000. I'm going to take $5,000 of that $100,000 insurance bill,
Apply it to
which
that
is
job.
sitting nicely down in overhead. I'm going to take $5,000 of it and I'm going to put it on that job, and I'm going to reduce my overhead by $5,000. You've reallocated it from fixed to, well, the number one thing wrong with that, it's arbitrary. I just said 5%. Why not 10%? Okay? Let's say I do 10% is my standard, and I'm going to go give every job 10%, and now I come up on my 11th job. Am I going to go negative? Am I going to leave it all? It's a meaningless, it's arbitrary and meaningless. People do it, and I'm for this, because they want to make sure that they get their true cost, that they have enough to pay for their overhead, enough margin to pay for their overhead. That's what break even is.
Mm-hmm.
Just take your overhead and divide it by the margin. That's how much you got to sell, right? So, and it messes with your margins. So on your very first job with these guys, you charge them 10% of your insurance as a burden, okay, on that bid. Okay, so that reduced your margin by 10%.
Okay.
Because you had your price, you take 10% more expense, it reduced your margin by 10%. It does do that.
Yeah.
Then the next time you do it with the same guy on the same thing, but you've already burdened him once, so you don't burden him again, your margins are off.
Okay, I see.
And there's always,
So
even if it's not the same guy, there's always a point where you've used the whole 100,000 and your margins change,
Yeah.
right? I'm allocating. Oh, now I've used all the, my margin just went up by 10%. Well, you can't do any of the planning that we talk about using break even if your margins change right in the middle. I mean, if they change because expenses change or prices change, but not just arbitrarily changed. What's your planning number?
Gotcha.
Right.
So I think the one that I think of with people that I see commonly is the one that you said you're okay with because it's just a price increase. So, hey, in general, we just add 10% for overhead burden to every bid.
Yeah.
And you're okay with that because it's essentially just a price increase.
Oh, yeah. Yeah.
But you have also said in the past, well, if it causes you to lose the job, what if 9% would have gotten you the job instead of losing it at 10? And you've said, would you take the job
burdening?
at 9%? Yeah.
Yeah. Oh, yeah.
So that's the one that you've told me before is like, you just had a profitable job that you turned down.
Oh, I see. You're talking about it gives them
Yes.
misleading information that they're acting on, not what I said. Yeah, absolutely. If you stick a big old, well, I mentioned a company in my book from West Texas, manufacturing company, and when I went in there, I thought it'd be pretty cool because they didn't understand break even or anything. They'd just been doing the same thing over and over.
Right.
And real slim margins, real tough business that they were in. And one of the things I asked him was, what does your labor cost you? And the guy told me, I can't remember, 68 or 88, whatever.
Sure.
Some huge number. And I go, well, how's that? And I make the point that I've been in the parking lot of this place many times, and they said their labor rate was $80 an hour, which is equivalent to $160,000, right? That's a full-time at $80 an hour is $160,000, 2,000 hours. And I said, well, I've been to your parking lot. I don't think that anybody out there is making $160,000. Somebody would own a Ferrari, right?
Yeah.
And I said, where did you get it? They ticked off really, he didn't have an answer. He said, well, it's what you pay the guys, and then they get the common things about I've got to pay their taxes and their benefits.
Right.
Then we've got to have something to make a profit. So they added something to make a profit. And I said, let's say the total of the actual cost was $30. They're at 80. I said, well, you added $50. Where'd you get that? Well, we got to make a profit. I go, I know. But you're making $50 an hour profit if you get that job, but you're going to pass up a $70 an hour job because you think you're going to lose $10 an hour. Well, you're not. You're going to make 40 as a margin, right?
Yeah.
So it leads to all kinds of, and nobody can tell you where it came from. So if you want to improve it, which is the goal of management, right? What are we going to work on? I mean, obviously fewer labor hours, but other than that, what can we do?
Yeah.
So you're just, burden. People get defensive. I've had a couple of people get really angry at me for talking about it, so I kind of back off a little bit. But
I think at the end of the day, like, you both have the same goal, which is to run a healthy business, right? And you want to do it by means of really calculating and being very specific with the numbers and knowing the numbers very accurately. And they want to do it by making sure that they cover all the costs are covered, so in some capacity. And you want to do that too. They just don't want to have to go through the calculations.
Here's my whole burdening is something you do for bonding companies, because bonding companies want to know how far along are you,
sure,
and how much profit have you made. So it's a thing that, and GAAP accounting uses it, and it's a thing that they try to take all, which is fine. There's not a single operating decision to be made in burdening, right? There is in WIP, which is another subject, which is what bonding companies use it for. But how else are you going to know what I have to sell to break even? And how else will you know the fact that I talk about a long time, that if you can raise your margin 1%, which is from like 30% to 31%, that you'll increase your net profit by 15% if you're an average company in the U.S. How can you know that? The burdening messes everything up, because you don't have, if you had $1 million in the overhead pot that you're trying to break even and you're taking chunks of it out, where did it go? And I don't know how you can calculate anything. I don't know. It drives me crazy. And it could be that I'm wrong, but I'm not. And I cite my authority as Spencer Tucker, who wrote the break-even system in the 60s, who is the father, really, of break-even. And he's famous. People use his charts and all this. They don't even know where they came from. And he says it. He says burdening is an arbitrary exercise Just do not do it. Screws up good information. Say it.
Okay.
Remember, take that 10% from overhead and put it on there. Why not 5? Well, I don't know. And then guys are arguing. Or you got a plant in another town and you charge them more overhead than you. Well, we didn't. Well, you talked to Wanda. She did your invoicing. She's part of what you do. No, that's all.
Yeah. Okay. Well, I've seen you get in the heated discussions before.
Yeah, I know.
So,
I need to shut up.
No,
I get
good.
into heated discussions because it's confusing. It's even confusing to me, the arguments against it, other than that arbitrary argument. But if you allocate your overhead out to jobs, you change the margins. You reduce the job is priced. You allocate on it. You reduce the price. Okay. Or you raise the price to cover the overhead. That's fine too. When that overhead runs out, now your margin changes, but you didn't do anything differently.
Yeah.
So I stick with Spencer Tucker. If he didn't say it, I wouldn't be so strident about it.
Thanks for checking out a clip from the Cashflow Contractor. We have full episodes where we go deep on topics that help you grow a construction business that runs without you so you can have less stress, more time, more money. Now, we've got other videos, other clips, but if you want to check out the full episode for this clip, you can click wherever our editor put it. It might be here, it might be there, it might be over my face, I don't know. But thank you for checking us out. We'd love to have you as a part of our audience. So subscribe or check out a full episode wherever you get podcasts.